risk on today. The stock market had a big up move, so the idea is Bitcoin should rally as well. It is. Notice you do have a level here. High pivot from the all-time high to the high here to right here. This is getting into a resistance. If it breaks this, you still have your $92,000 resistance right here.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway discusses Bitcoin's potential recovery to $90,000, exploring market signals and investor sentiment. Join him in this video for fresh insights on trends, challenges, and future opportunities in crypto.
Take a look at NVIDIA today. NVIDIA is off of its highs, only up 3%. So again, you would consider this to be lagging, but look at this trend line. Low pivot, low pivot, low pivot, low pivot, breaks and confirms, retraces, rejected, and then notice it's staying underneath this level. As long as it does not confirm above this, let's say 123 level, this is actually a bearish setup on NVIDIA. So keep that on your radar. Let's take a look at Amazon. Amazon, I still have a long with Smart Money Stocks and ETFs members. We're still in the money. We got in right here at the 192-ish range right down here. It has bounced today. I'm still looking for further upside. Short-term target would be right here. So you can see this pivot low and then this area right here. It kind of right around 214. This would be a great retrace. And then one of the things I like to do is just to see, and I don't know, I haven't done this yet, but look at if we do the fib right here, the 50% retrace is right in there. I know it's hard to see on the screen here, folks, but again, the 50% fib retrace is right in between those two lines. That gives me a major level of resistance that would likely be for Amazon. Let's look at Alphabet as well. Alphabet, a nice little bounce here. Now, Alphabet didn't get down to my slow end of the target. This is my buy level on Alphabet, so I'm just staying away from this at the time until it either rallies into resistance. I would short it right here. Notice the break, pivot low, here it hits, breaks. If it retraces into the scene of the crime, I pull the trigger on a short right there. If not, no big deal. It is what it is. Let the trades, and this is important, another methodology point is the psychological side. Use your logic to go with the charts and be disciplined. Disciplined traders have a higher probability of success versus traders that get whipped out and say, oh, it's already up 30%. I'm going to jump on the long bandwagon and hope it continues up. Those traders, they might have a great score in a bull market because in bull markets, things can continue to run. But in the chop market or the bear markets, they get decimated. So remember that, folks. Very, very important. Okay, let's go over Bitcoin today. Bitcoin catching a bid. Now, those of us out there that know how Bitcoin trades with just risk on or risk off, we know that risk on today, the stock market had a big up move. So the idea is Bitcoin should rally as well. It is. Notice you do have a level here. High pivot from the all-time high to the high here to right here. This is getting into a resistance. If it breaks this, you still have your $92,000 resistance right here. I did, with Smart Money crypto members, take some profits off the table today. I took some over 10% on Uniswap as well as Dogecoin. We made about 25% in that service today. I'm still holding altcoins, other altcoins long, but I always believe in, and this is another key methodology point, is when you have, let's say, 10 longs and they're in the money, take a few off, right? Take a few profits, put it in your pocket because you never know the future. Leaving your money in the market is always more risky than pocketing it. So again, I might believe that maybe the altcoins still have a little bit more upside, but it doesn't mean I'm going to be right. So take some off, put it in your pocket, and then let the rest run. And if it runs a little bit more, take a few more off the table and put it in your pocket. And these are the types of lessons that I've learned the hard way in my investing career, right? Where I just leave it all on the table and then I wonder why my account blows up when everything craps out, right? That I learned many times over early in my career. I've adjusted to that by taking a little bit off the table, letting it run a little bit more, taking a little bit more until finally I get what I want, and then I exit. All right, so Bitcoin again coming into some resistance around 89,600 and then 92,000.
Bitcoin soared to almost $89,000 at the start of the business week, but faced immediate resistance, slipping below $87,000 soon after. One factor is the overbought relative strength index above 70, which often hints at a local price top and an impending pullback. The TD sequential also signaled market exhaustion, reinforcing the idea of a short-term correction. Another hurdle emerged around $89,000, where the 50-day moving average intersected a descending trend line from the all-time high, forming a robust barrier. Whale activity contributed to the decline as large holders offloaded over 20,000 BTC during the sudden price spike, effectively locking in profits after recent accumulation. Adding to the market's jitters was the movement of roughly $1 billion in BTC from wallets associated with Mt. Gox, triggering fresh concerns and short-term selling pressure. These technical and fundamental signals collectively suggest that Bitcoin's rally may stall unless renewed bullish sentiment clearly outweighs ongoing caution.
If we go to gold today, let's take a look at gold. Gold today continuing its pullback. I gave you guys this trade perfectly. I said, here's your parallel. You should pull back. I still think there's more downside on gold at minimum to 29.50 here. Silver today kind of chopped around, right? Basically flat to slightly negative. Friday, we talked about this level being hit. That's going to be your support. You got a small bounce. It's only minor support, though, so it's not a viable level for me, at least, as I expect silver to potentially go down even more. Oil today, let's take a look at oil. Again, continues to bounce. Notice, again, big down move into literally multi-year support. Look at this support line going all the way back here. It should bounce. It's making a bear flag. I still think maybe 70, 70.5. But ultimately, I expect this eventually to curl over and break to the downside.
Bitcoin's next big catalyst could arrive with Friday's personal consumption expenditures, PCE, data from the United States, a measure that may soothe inflation anxieties and spur renewed interest in riskier assets. Crypto traders have watched closely as Bitcoin hovered around $87,000 after a promising start to the week. Some analysts, including QCP Group, say the upcoming release could provide the momentum needed for a breakout, especially as investors eye what might happen with inflation and central bank policy. Market jitters have eased somewhat since President Donald Trump signaled potential exemptions to recently proposed tariffs, temporarily calming concerns. Other observers note that external factors still pose risks for Bitcoin's trajectory. Global trade war fears have weighed on investor sentiment, and the cryptocurrency has dropped over 14% since Trump's inauguration on January 20, when tariffs on Chinese goods were first announced. Nonetheless, historical trends show April often delivers strong performance for Bitcoin, posting an average monthly return of nearly 13%. A favorable PCE reading may reinforce that pattern, potentially launching BTC toward new heights. Arthur Hayes, BitMEX co-founder and chief investment officer of Maelstrom, believes Bitcoin could climb to $110,000 before a retreat to $76,500. Research analyst Juan Pellicer from Intathablock shares a similarly optimistic outlook, pointing to institutional activity and the Federal Reserve's softer monetary stance as forces that might propel the cryptocurrency. Although any sudden volatility could spark a pullback, the overall sentiment suggests that if inflation fears abate, Bitcoin could surge well above previous milestones. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.